Welcome everyone. How we doing? You, Sunny, how we doing? How's everybody day today? It's a pretty fun one. Oh yeah, smacked that one. Even got it in my tab, mentioned it in trade floor. So I think a lot of people got on there. Turned in to be the bottom tick. You never know it's gonna work out like that, but it was today. I sold like right here. Maybe it was up here. I don't remember. I sold somewhere in here. Yeah, see, the thing that most people don't realize is, a lot of the time, I mean, I do take most of my position off, but I tend to hold runners. But let's be real here. It's better to tell the degens that you're all out, make them have to figure it out themselves. Welcome, guys. How's everybody doing? Yeah, exactly. Are you still holding? It's like, I mean, I just set a stop at 100% and it hit. Welcome, everybody. Right on, Sunny. Love to hear that. 1K been killing it, dude. That guy's the goat. Yeah, gap fills are the best. Yeah, Josh, you're probably right. Just hammer those things all the time. Uh, man, poor Norvin listened to me today. That poor guy. Up on Nvidia. I didn't look at Nvidia much today. Since somebody asked me to pull it up. Oh, this one. Things as good as filled. In my mind, what it was off by a buck. $2. Yeah. Hope people are hammering longs down here, man. You gotta try to do it when it gets all the way down there. Oh, look at that, man. That was a pretty dang easy bottom tick right there. Just going from that last candle of the day yesterday. That like the last candle could have been your entry and your stop, man. Risk a buck downside on Nvidia to moon it. Like that's like, but that's the tricky part, you know, man. People, that's why gap fills are perilous, you know. But there was guaranteed people trying to short this thing, gap fill, gap fill, gap fill. Then it didn't happen, and they got blown out, you know. This thing is just so tradable, huh?
Yeah, buddy.
What a breakout. It is so funny. Tilly was telling us to buy it back here. Yeah, we should probably get along on Nvidia. It's gonna break out, and everybody's like, "No, you're dumb. It's going to 400." So it's up $100.
Oh, it's you.
Oh.
Oh. There you go.
Welcome everybody. We're just gonna give her a few more minutes here.
What happened?
How we doing, River?
What's up? How we doing, everybody? We're muting mics now, is giving people a chance. Oh, what's up? We got Nanda in the house. How we doing, Nanda? Oh, you're snowing it today?
Yeah, you can't mute me, man.
Yeah, I don't think I tried to mute it. It didn't mute anybody. So as it stands now, everybody's unmuted still. So
We're able to talk. Oh shit.
Yeah, hope you're good though. Excited for the lecture.
right on. Yeah, I love the Q&As, man. They're my favorite. Dude, snow. Wow. Little gapper and dumper. Always look at that thing. Nice volume coming in on that too. Into that close, huh? OPEX day tomorrow, dude. A lot of weird volume around in the close today for sure. I never trade snow, man. It just gets it's you gotta hit it right, but God, when you hit it, it is a print fest. I completely forgot about this thing. Here's back when I used to trade it. It's a long way from that time. Snow was in when snow traded at like 300, man, it was pretty nutty. So we'll just give this another second. Welcome everybody. Hope we're all doing good. Thursday night Q&A. So we'll see how the turnout is, you know. Sometimes people don't like to come ask questions, but hopefully we'll be able to get to everybody's questions. We're just gonna give it a couple more minutes.
Yeah, so for that snow trade, I looked outside my window. It was snowing. It was snowing today, so I had to take that as a sign.
Yeah, you had to take that as a sign to trade it. I like that, dude.
It worked out.
You got to be aware of your surroundings, you know what I'm saying? Well, this
New
thing
strategy.
might actually, this thing is getting ready to move though, ain't it?
I'm
When's it
pretty
got-
much out of it, so I'm not really paying up too much attention to it. But it's it's back at support demand. Similar setup to what I saw on Microsoft before that moved to the 390s, almost 400,
Yeah,
being down at 370, but definitely looks good here. I'm sure there's some buyers here.
Man,
I'm not
pretty
too much
easy
of
to
a
just-
fan of snow though.
yeah, pretty easy to try to stay long on any dips down to like 180 even. Because this mess right here on the weekly chart, like that thing spent, what is that, 3 months, something 4 months in that area, you know, that getting below 180 down to 170 is probably going to be a pain for it. Earnings still a month away.
Agreed. What do these guys do? I don't even know What's this company about?
Cybersecurity, right? I think. I don't know. That's what I always thought. And
In
just,
my
the
5+
typical,
years of trading, I have no idea what. I
I
mean,
think
I
it's like
don't trade with Tesla.
cybersecurity and, cloud bullshit or whatever.
Isn't that like a bear flag on the weekly? Could be. I think would be.
So I personally don't trade patterns like that, but, or I don't like to name them. I like to think of them as trends. It's fine if you do, but there's like something that's hard is, you know, technically speaking, a bear flag cannot occur in an uptrend. So even though this thing looks horrible, technically we're trending up. So to me, if I was going to label this something, I would likely be labeling it a bull flag. That's just me. But because the trend is technically up, I mean, this thing, ripped like the whole market did for weeks and weeks. I'd be looking at this is the pull, this is the flag for that bull flag to form. But like I said, I don't trade them. I've seen way too many bull flags just dump to the downside and bear flags rip to the upside. So I just think this shit is two trends. I don't care which way it goes, break down or break up. I want to trade it. That's all I care about. Okay, welcome everybody. I got to do one more thing, and then we will get to rolling.
I agree on that. You rarely hear that nowadays. But yeah, above 180, can definitely see this being a magnet to 200 and possibly even much more. I remember the last time I saw a bear flag similar to this one, which normally don't trade anymore because it didn't go too good. It was on Netflix, and that had an end around like 220, 250, and now that's at like 500, 450.
The Netflix was like, I don't know. That's some trading. I'll always remember that I fumbled that one. I mean, we were hitting it right down here, man. I didn't think that it was gonna go another 66% from there. Nice sunny hit Disney. Oh yeah, thank you. I'm sure that was about Snow data warehousing, similar to AWS. Josh, we're talking Tesla already. Okay, well, we'll do a little. So welcome everybody. Thanks for coming tonight. I'm Dirty River. Thank you for being here. Thursday night Q&A. These are just pretty much open forum. We'll talk about whatever you guys want to talk about. Can talk about trades you took that worked or didn't work, or trades that you're looking at. Even just questions about how to use different indicators or how to chart things, or my opinions on charts. I was gonna spend I use them a lot. I don't talk about them a lot because I tend to get a lot of questions, but I was going to spend the first, I don't know, 5 minutes, 10 minutes, maybe even less than that, talking about Bollinger Bands. They came up in Trade Floor today, and typically after, anytime you talk about Bollinger Bands, I get a bunch of DMs about it. So pretty small attendance tonight, but hopefully we got a couple of folks in here that were asking about them. So I'm going to spend just a few minutes talking about Bollinger Bands, some different ways to trade them. Some of the things that people look for when trading with Bollinger Bands. And then, like I said, maybe 5 minutes, 10 minutes, something like that. And Bollinger Bands are a very, very technical thing. There's no way you're really going to understand them or understand the nuances of Bollinger Bands by just, talking about them for 5 minutes. But I just kind of wanted to go over them a little bit. And then once that's over, we will go open forum. I'm sure we'll spend the, rest of the time talking about NVIDIA and Tesla like we normally do. And it will be it'll be a great class. But so with that, we're going to talk Bollinger Bands. And Bollinger, he was a guy, they're named after him. Very good trader. Absolutely obsessed with statistical probabilities in trading. That's what almost all of his trading is based around. And so he designed the Bollinger Band. And so I guess I'll just run one of them for now, and then we'll go into it. So he designed the Bollinger Band. And so if you pull up the Bollinger Bands on your chart, you're going to pull up 3 lines. And what these 3 lines represent, the middle one is something that you guys know I love. It's a moving average, 20 MA. So the middle one is just a moving average. It's just your average moving average. Then these outer bands, as they're called, that's what people call them, are actually what are known as standard deviations. And it's not so. Standard deviations are interesting because they are something that they give you very, very high probability things that can happen. And so that's why Bollinger loved them, because standard deviation variations are something that can really, really help you in the market, whether it's identifying rejection points, bounce points, places where it won't break out or will break out, those kinds of things. But it's not the normal standard deviation math. He actually incorporates a little bit of the volatility of the stock into the Bollinger Bands. And so when you see them, the ways that they're pointing and the ways that they're moving and the ways that like ends are kinking, things like that, really tell you which direction the momentum of the market is going. And so that's where the volatility portion comes into it. So then you have these bands. There's a bunch of ways to trade them. People always try to say, oh, if it hits the band, short it, or the upper band, short it. If it hits the lower band, long it. And why they say this is because of what a standard deviation is. So we have our SMA here in the middle. And then this deviation out here, what the statistic on a deviation is, and his are not, because he incorporates a little bit of extra math into them, his are not quite as high a probability of a standard deviation, but I'm not going to remember the exact numbers off of my head, but it is 93% of data falls within this area. And as we can see, we look at the chart, hard to deny it, very good chance that like we don't have to go through here. We don't have to count nothing. We can see that almost all of the data falls in between these bands. So that is how they can end up acting as support or resistance or, breakout or breakdown levels. Well, what some people like to do, and this is, I had traded Bollinger Bands a little bit. But then, a few years ago now, I knew Tilia used them. And so I want to learn a little bit more. So I started asking him questions. And something that he does is he actually runs 2 sets of them. So it's not, it's hideous. Like the charts are hideous, but we can look at this and we can trade around some very good statistical probabilities. And so we know that about 93, I believe is what it is, percent of data with his math. It's even higher with normal standard deviations. 93% of data will fall between this line and this line. Well, once we blast by it, this second standard deviation band right here, you jump up to 98, 99% of data will fall between these, deviation lines. And so that is how you can start to, so I should have said that. So you add another set and then you just on, Thinkorswim, you just run 2 Bollinger Bands. However, when you run the second one, you will see you want to edit it. And you'll see number deviation up, number deviation down. You want to change that to 3 and -3. And you'll know which ones, they'll be labeled. So you want to have a 2 standard deviation and a 3 standard deviation. So then you have about 99% chance, 98% chance of all data falling within those areas. You can see, there's times where we really blast, and we do close out here. And so, we're talking about candle closes between these, extremely rare. This one, you can see we're pulling back. And then again, we just proceed to ride the band up. So this is kind of one of those situations where, did a short work off of there? Sure, but it was nothing to write home about. We had momentum kinking to the upside. So that's typically when you will see those extensions out of the band. Same as down here, hitting the bands, closing outside of the band, closing outside of the band. We're seeing momentum to the downside, but this is where I like to start looking at plays. I'm never going to short the first touch of a band or something like that. It doesn't mean enough to me for that. However, when I see a couple closes outside of a band, then I start to go, okay, probabilities are getting much higher. So on these ones, this one is a 2, these 2 lines are a 2, and these are a 3. And so when I start to see a couple of these candle closes, you know, you can even see it up here, closing, closing, closing. Well, when we first start to have our first moves away from it, that's when I start to look for a trade. And you get what Bollinger or a lot of us call, I mean, and it's from him, we all use his terminology now. You get what's called a rubber band effect, where you can get a very explosive move. Sometimes it lasts one candle. Sometimes you can see like this one, it lasts 5 candles and just starts gapping, you know, can, you know, even like this, riding it up, and then you finally get a big hard push down, you know. You look for, like, I like to use Bollinger Bands when you start to see abnormalities. Like, we're closing on the band, closing outside of the band, closing outside of the band. We finally get a candle close above this band. That is where I take a shot at trying to catch a big bounce upside. You know, a lot of the, I won't say a lot of the swings, but many of the swings I take are based on extensions into bands and saying, okay, now is the time for this to happen. So this is great. This is all on the daily time frame. They can also be wonderful tools on shorter time frames. Hourly bands, I know Tony, if anybody knows Tony in here, hourly bands are an insanely powerful tool. You know, again, they make your charts hideous. There's, you know, unfortunately no way around it. But they make your charts hideous. So when you start to see an hourly band, this one is closing outside of it. You can keep watching this candle. Another candle closes outside of here. This is where you can look to take a trade. And, you know, this is hindsight trading. It's useless. All the furus want to do it, you know, but we get to pretend that we are the greatest traders ever. And we take the good entries. Say we're watching SPY and it's dumping and it's dumping and it's dumping, and we've had 2 hourly closes outside of the band. Well, this is where you can look to take your entry. And where a band becomes very powerful, it tells you where your stop is. Because, you know, we don't have any of this data to the side, so obviously we don't know that they're going to kink and go up. But we enter on the close of this candle, on the close of the hourly, that hourly switch. Of course, this one turned for us really good. So we're going to know our entry is going to be right around here. Our tight stop is going to be the low of this candle, the low of the previous hourly candle. If you really want and if you want a slightly looser stop, it's going to be following these bands down. So if you're trading the bands, they give you a wonderful entry, and then they tell you where your stop out is. And if you're trading, you know, some of these longer time frame bands, hourly, 4-hour, even 30-minute, they can offer you that same rubber band effect that we discussed on the daily time frame. The other thing that a band does for you is it gives you a profit target. So we know that statistically speaking, we are going to get out of this area. We don't know when it's going to come. We're, you know, you can always be wrong, but we know statistically speaking, we are not going to stay between these 2 bands forever. So your first profit target is going to be the band. You don't know if it's going to break outside of it, but it's going to be the band, because that is what you're going to target. So you're risking, you know, 20, 30, 40 cents on the downside for a $1.20 move on the upside. Great risk reward on these kinds of things. And then as it continues to run, you can start to use, well, I like using VWAP with it. You don't have to. You can start to use the bands to tell you where you think the market is going to go. Once we've broken and closed above the band, you should always be trimming, but it becomes your stop. Then if you get another nice pop, you know, you always trim. And then as you come to the mid band, statistically speaking, we actually track to the mid band a lot less than people would think. But you will eventually end up at that mid band, and that can end up being a really, really great place to get out of. So another way that I like to use them, this has gone on a little longer than I wanted, is on short time frames. Basically, nobody talks about it. Nobody likes VBANs on short time frames but me. But I think they're a really cool tool. Unfortunately, they can be, you know, they can be absolutely stuffed with fake outs, you know. And so you have to be very, very careful. You have to respect your stops. You have to do all of that stuff. And a lot of the time, you're going to want to use them for scalps more than anything else. However, I wanted to talk about these just on this shorter time frame, just because people were asking about it today. And so we're going to talk about it today. A way that I love to use bands and a way that Bollinger used bands was he traded what are known as M tops and W bottoms. Nowadays we know them as double tops or double bottoms, or even, Head and Shoulders are basically a glorified one of them. And so today we had an example backed by news, but it happened to just show us where if everything goes perfect, how a Bollinger Band can really, really help you identify a double top. So we're trading in the day, we're watching the market, and we get a rejection here, after we try to push up the bands. Oh wow, God, you guys are killing it. We get a rejection off of the bands eventually. After it rides them up, you can see this is where people shorten the first touch on the band are likely getting clobbered over and over, but we get another rejection. We did have the part that we need to notice. We had an attempted break outside of the band that our momentum was not able to make happen. Well, we get a nice bounce up, and then the candle never makes it to this band. We never have that, strength and momentum in the market to get back to this band. So for us as traders, we can say, okay, this push does not have the same strength and the same momentum that the first push had. So because we haven't touched up here, this close starts to offer a very, and this is 475. If you were getting long up here, you were wrong anyway. But there was no reason to get long here until obviously it broke later in the day. But getting long here was wrong just because of 475. But this shows us good, strong momentum couldn't break out. This looks like strong momentum, but statistically speaking, according to the market, it was not as strong of momentum. So this shows us a really, really powerful way to say, okay, we had a push out, didn't work. We had another push up, didn't work. It's likely a double top. And so, I love double tops just because of, very tight stops. For me, I'm entering here. This is where my entry is personally going to be. And then the stop is going to be above a band or above 475. So your risk is going to be very, very low, 10 cents, 20 cents, somewhere in that range. And then of course, targeting, because we're close to it, this midpoint on the band, about $1.40 down or whatever it is. So very, very powerful tool for identifying double tops and double bottoms. And works really great on Head and Shoulders for a head, for a Head and Shoulders. It's very similar, but you want the shoulder to push out, you want the head to push out, and you want the third shoulder to not push out. And the third shoulder not pushing out of the bands is what gives you that confirmation to say momentum is dying, because if you're trading a Head and Shoulders, it needs to be an uptrend, because they're technically speaking, they're a reversal pattern. I don't trade named patterns like this, really. I trade double tops and double bottoms, but a Head and Shoulders or Nivers Head and Shoulders is a reversal pattern. So you need to be trending up, set a high, pull back, set a new high, pull back, attempt to set another new high and not make it out of the band and sell off. And the bands do a wonderful job at making you not guess the momentum of the market. Okay, so that was too long, 15 minutes on Bollinger Bands. I know they're kind of technical, super hideous on charts. But something that I have a chart that I use them on every single day. So it's something that I like to always keep my eye on personally. But with that, Thursday night time Q&A. Any questions you got? Any trades you all have taken? Charts you want to look at? Any of that stuff? Let's get to the questions. How to set up? Do you guys see this? You see this square in the middle here? Oh yeah, I think you do. You know what, Norman? Tonight we will check out SMCI. I promise you.
Yeah, we do, River.
Yeah, we will. So you see this. So Bollinger Bands, I'm running two instances here. 20 is the length that you're measuring. It's the simple, and you can see simple moving average. So 20, You don't ever really need to change that. But then these two numbers here, -2 and 2 and -3 and 3, those are this number of deviations away from that that you're analyzing. So if you want to run both of them, you can run the 2 and 3. So as all you guys know, I'm super simple. I like to keep things like I'm an old guy, you know. So rather than run the 2 and the 3, run this 2.5. So it's not the 3, so it's not quite as dramatic as the 3, but it's more dramatic than the 2. And then you don't have to have ugly charts on there, or as ugly of charts, I should say. And then you know that if you're getting outside of this 2.5, it is likely going to provide you a trade. You know, we had one up here, you'd obviously have to be quick on it. One down here, offering you a nice scalp up, almost an entire dollar up. And so, you know, play with deviations that you like. Find something that works for you. You know, there can be days where, like, I mean, theoretically, that would have been a tricky one. This one would have been nice, unless that's like a phantom sort of deal, you know. But if you run these, they likely aren't going to give you a trade every day. And you know, see, here's a nice stop. Well, I mean, if you were really on it, you could have scalped, I guess 40 cents out of it, not too bad. But likely would have ended up a stop. Likely would have ended up a stop out. Here's one. Nice blowout. I mean, you might have got a little worried on these two, but nice blowout here can give you a big bounce. But run a higher deviation. You know, don't run the 2, don't run the 1.5 and try to trade it every single time that it touches, you know, trade some of these longer ones. And, you know, you can see here's a day where like never broke, never touched it, never did anything. So it doesn't even provide a trade. It can just be nice additional confirmation of, oh, you know, hey, we closed outside of here. This candle closed inside of it. I'm going to try long, you know, that's simple. Just keep them very simple until you learn you know, some of the nuances of it. Here's a nice one, provided great scalp. Of course, it'd have to be quick, but run some of these higher ones, 2.5 or whatever you want. Did that work for you, Joe? Yeah, Norvin, I promise you we will be checking out SMCI for sure. Did AMD have a cup and handle? I for sure don't trade cup and handles. And there's you're gonna need to tell me a time frame when we get back to it. What is my favorite setup going into tomorrow? You know what? People are gonna love this one. Tesla. No brainer. I mean, Tesla is the easiest trade on the market right now. You know, I mean, I think we're selling. Last I saw, we were down a little bit in the.
I swung some puts.
But
Let's go.
Tesla, and I'm long. I'll tell you right now, I'm long on Tesla. You could like, I won't short this thing. Like you know, like we might short it, but I'm looking at this down here. You know, I mean, at this point, all we have below us is support, and support is closer. You know, this Tesla, in my opinion, and it didn't do it today, and it probably won't do it tomorrow because I swung calls, so I'm going to get clapped. Tesla is ready to move, in my opinion. We'll see. You know, not quite an inside candle, but pretty dang close to an inside candle. Inside candle, moving into the trend, moving away from the V band. We have momentum kicking to the upside, obviously strong momentum to the downside. You know, even without too much stuff on here, I'm ready for Tesla to run. The daily candle tomorrow is going to open kissing this trend. If we open at this level, it's going to open kissing this trend. So we'll see what levels we end up at tomorrow into the open. I'm sure we probably have like data in the morning. I don't know, or a Fed speaker or something. But if we can open at this trend, every single trade I have on Tesla tomorrow will likely be based around this 212 level. If we get above here, I want to see Tesla get to ripping. If we break below 212, then yeah, we can short it down to this 208, 207. But you know, I'm a cut and dry trader. I don't want to predict things will break out or break down or any of that stuff, you know? So if I want to know what's going to happen to the right on the chart, I look left on the chart. And when I look over here, Tesla took the last time we were trading down around 206 area, Tesla ended up taking it. I'm not going to say this is going to happen, a $40 bounce in 4 days. I'm absolutely not saying that is going to happen, but I look at it from the risk reward standpoint. You know, we bounced pretty well close to these lows today. So we know that there is still some buyers sitting around down there. You know, we became very, you know, and so I don't like shorting things in the hole. You know, it was way easier back here when people were saying, "Hey, do I short Tesla?" I said, "Yeah, if it gives up 225 and this little, gap officially fills over here, if it gives up 225, for sure, because that's where the risk reward is. We start going back in that gap, then you stop out for very small loss, But I started looking down here. I'm like, well, this gap's been filled. We took a massive bounce off of here previously. Haven't been back to it in 3 months, something like that. I want to see this thing fly. And I hate Tesla. I mean, it's a terrible company. I do think I'm hoping that people are finally realizing it is a horrible company. And everybody that thought they were investing in Elon being a good idea has ended up being a really terrible idea. But all I know is where this daily candle opens tomorrow is putting us in a spot for Tesla to either rip upside or downside. I don't care where it goes. I would love to see it break and run to at least that weekly 200. And, I do want to emphasize again, I'm not saying Tesla's about to put in a $40 run. Absolutely not. Like you just heard, like my top price target right now is that weekly 200. This chart looks horrible. Like look at this weekly chart. It looks horrible. But let's get a technical bounce in here sooner than later,
Yeah, River,
Can we
what do
go
you?
over Tesla? Somebody's asking about Tesla specifically. I should let's get some real indicators that not just the B bands on here. Tesla pre-market into break and retest. This one here, I mean, you're talking today. Let's see. I mean, honestly, what I probably would have been watching on Tesla going into the market open is this. Next trend likely would have been somewhere around here. Oh, well, that is what you were talking about. Did flips hit that or something? That looks like a flip style trade. I mean, that's a pretty easy one. You break down from the little, segment. Nice bull flag breakdown right there, but retest right there, you absolutely take that. You're retesting the trend, you're retesting the EMA, this blue line's opening range. It wasn't set at that point, but yeah, you short this thing, stop. I mean, you could even go 218, but if you wanted super tight stop, you could have this 217.80 or whatever. That's a really, really awesome trade if you hit that one, Josh. It's sick. It turned into a print fest. I mean, what'd that thing sell off of that? $10? Yeah, that was a printer.
River, you don't think it's concerning that we on Tesla hasn't reacted to any of the upside that we've seen in the overall market?
Oh no, man. He's dropping prices in China. He's failing at Twitter. I mean, the unfortunate thing about Tesla is that it's not just, it is technically speaking, but it's not just Tesla. And Elon's been doing his dumb stuff. He's, posting like, I don't know, homophobic things on Twitter again and stuff. Elon's doing Elon things, and then he's saying, oh, I don't feel comfortable, progressing AI or whatever with Tesla unless I have 25% ownership. It's like, well, okay, last year when you absolutely like, when this was going on, and when this one was going on, and him and his brother were dumping stock, and he sold out of 13% of his ownership on Tesla. Well, if he cared about the company, he likely should have been looking forward and not sold over half of his position in Tesla, But this sell is not technical. This sell is because Elon's doing dumb things. He's lowering prices. People did not like the Cybertruck. Doing dumb things on Twitter. Did it again today. I mean, I'm not gonna say that it happened, but he posted something like, I mean, okay, well, it's like kind of funny on Twitter, but like he posts a stupid thing on Twitter, like right here today, and the markets they sell him $2. I mean, like what's happening on Tesla to me right now is nothing, is nothing technical. This is just an Elon's an idiot sell off. We get them, like they happen. People realize this dude's nuts, but I just look at this strictly from the technical standpoint. Risk reward greatly favors the longs right now. I mean, even if you just hammered it at 212 into like it's 212, you hammer calls into open, and you're going for like, not the best risk reward you can. You don't even care about your entry. Your stop is down here under 206. So you got $6 risk, and you're looking for weekly 200. It's $6 above you, $6.50 above you, but you got a 1-to-1 risk reward trade right there. That to me is like, I would rather be looking for a bounce. Tesla is down, and I hate Tesla. I gotta point this out. Tesla's down what 21% in a couple of weeks. You know, at a certain point, you're chasing it. Is all I'm saying. Don't get me wrong, dude. I can't wait for like all of you to tag me tomorrow and be like, River, Tesla's giving up 200. You're an idiot. You know, that would be great. But still, for me, I'm trying to be long here. I'm trying to look for, either trend break or 212 break. I swung calls, so I'm hoping for the break. And then to top it all off, earnings next week. I don't think it's necessarily going to be great, but we got earnings next week. So got a question. Any tips on traders struggling with the failed sell-off in rally areas? I'm not exactly sure what you mean, so you're gonna have to explain that one to me a bit better. Oh God, crash. That can't be like a real crash, though. Is that real crash? How can you set stops for contracts based off stock price on Webull? I'm unfortunately not going to be able to help you there. Oh, we got Kindred in the house, huh? Oh, there you go. Thanks, 1K. Can you add the hourly 20? Yeah, let's actually I'm happy you brought that up. So let's talk about that. And I'm gonna pull up another chart next to it. We talked about this in lecture last week. I mean, I post it all the time, but we talked about this in lecture last week, and something that I really and I got this indicator from Toasty. It might be pinned in his tab, it might be pinned in my tab. If it's not in my tab, feel free to ask me and I'll get it for you. So it's a multi-time frame moving average. And so you can see right here, I like to use the hourly 20 all the time. Like it's just I like it on all time frames, and so it's something that I use all the time. And so we'll just even look at let's even look at that. It's something that I use all the time, and it's one that I like to tell people. And you don't want to use just it or anything like that. I'm not trying to say it's like that simple, cut and dry. But the hourly 20, if you're above it, then you know that everybody trading for the last day is making money being long, not making money being short. And if you're below it, then the shorts are likely making more money than you are. If you're long. And so how I like to use it is on a day like today, where we have SPY and we have QQQ. We have both of them, So, and it just so happened to line up at the opening range and blah, blah, blah. And so I talked about it in my tab and said, if we give it up, we can get to a little bit of flushing. Well, we did give it up on SPY. Then the next thing that I mentioned, and of course, as I was watching trends. I'm always watching trends. So then one of the next things that I mentioned, and there was also like $160 million in SPY calls coming in somewhere down here, but the next thing I mentioned is, okay, we have QQQ at the hourly 20. We have SPY below the hourly 20. We know one of these is telling the truth and one of these is lying. So that's when you start to watch for things like, what's going to break out? Do things look ready to bounce? Do we have Apple, Amazon, Microsoft? Are they at support? Those kinds of things. And say, do we think SPY is likely going to bounce, or do we think QQQ is going to break down? They're different things, but there's no denying that 40%, 30% of SPY is the same thing as QQQ, so they really do a very, very similar thing. So that was, that trade that we ended up taking a bunch of us to trade for and in my tab and stuff like that. That was why we were looking to buy that dip down there, was because we had this confirmation. If we're going to get long on SPY, we're coming into this trend break and we have QQQ holding, then we likely want to try to play the bounce. This is QQQ holding. We have SPY consolidating as well, right into a trend. So we want to try to play the bounce, because for us, it's kind of, similar to what we were just talking on Tesla. The risk reward is much greater to the upside. We can get short down here, but we haven't been able to break down for 30, 40 minutes. Why would we want to be short down here? Buyers are winning. And so we look to get long, knowing our stop is if we're wrong and we give that up, we're risking 30 cents a downside or whatever. And then obviously looking for trend break, opening range, a nice buck move to the upside. So this is a way where you can look for that confluence in I guess I should delete all these so we can see it a little bit better. that's where you can look for that confluence in the market, you know? And I'm not saying it is as simple as, you know, buy the dips as long as we're above this, like, but it, you know, it should be a role in helping you buy dips or short rips. And so, that was where where this trade came from for me today. I saw that tech was holding strong. Well, you know, I mean, after a big sell-off, not to say tech was holding strong, but tech was holding the level I needed it to hold. No questions asked. And I prefer to trade SPY. Contracts move better. They aren't spready. So buy SPY calls. And if this gives it up or this gives up lows, you stop out, you know, so very, very low risk on the risk side trade with nice potential upside. Ended up being insane upside, but that's how I set them up. And I have charts that always have the hourly 20 on it because I like to watch it. Oh, we got Norvin talking Tesla. We're going to SMCI here in just a second, Norvin. I hope you are ready. There we go. 1K Tesla 225. I'll take it. Which standard deviation am I using on Tesla? No, I mean, those are the same 2.5 or whatever I had pulled up on Tesla. Same thing. But like I said, it was what kind of news we got tomorrow, Sushi? Home sales. Oh, but that's all aftermarket open. Great. Makes me feel better. Tesla's absorbing Sushi Corp, so it's probably gone bankrupt. Oh, the chart on, yeah, so that, you know, like, I do want to point out that, like, I am in no way disagreeing with Nando at all. You know, I mean, this chart, like, you look at Tesla, this chart doesn't look good. Like, it doesn't look good. But to me, for the first time, it looks good enough to try along, you know. I did get him, you know, I got him down here and then it got beat up. And so, I mean, I still closed red on the stupid things, but I got a month of time, you know. But yeah, like, Nando is right. This chart looks horrible. But I think this chart, as if it hasn't made a big enough move, is setting itself up for another big move. Up or down, who cares? You know, I'll admit I'm wrong and I'll stop out of those calls if the short looks better, you know, no big deal. But Tesla coin VRT, but we're talking SMCI today. Oh, AMD 15-minute. Oh, like intraday? I highly doubt it. No. So I don't know if you're talking about here, but no. To me, you might have noticed I'm very, very stubborn when it comes to patterns. To me, in my personal opinion, if you need to have a rounded cup. It needs to not have big spikes in it. You know, you need to have a nice rounded cup. You need to come back even. You know, the neckline of your cup needs to be even. And then you need to come, you know, little pullback for your handle and look for the breakout. You know, so this to me, this is just a nice little V-shaped recovery is all that is. And so to me, this is not a cup and handle. I'm ornery when it comes to, oh, here, like this to me, here was a nice cup and handle. God, did anybody catch that? I mean, if this is what you're talking about, then I take back what I just said. This is a perfect cup and handle that resulted in a $20 rip on the thing, you know? Yeah, there we go. Can we talk about NVIDIA? Yeah, but we still got, there we go. Norvin, NVIDIA's lame. Let's talk about SMCI. Imagine naming your kids Elon and Kimball. Oh God, this is hilarious. Oh, dude, that would be trouble. Oh, you guys would be wasted. Okay, let's see. Here we go. SMCI. Let's really zoom out. Okay, so down here somewhere, you can see this range down here. So this is where Norvin originally began asking me about SMCI. And I told him, you know, if it breaks 42, get long. So it did a couple of times. Well, then Norvin's port went the wrong way for a little while. So then by the time Norvin came back, here we are. You know, this is where it had run 40, it had run 100% from there. So then this is the very first time Norvin came back and started asking me about SMCI calls. It got clobbered. But then we started talking, hey, break at 90. Little did we know what SMCI was going to do. You know, people are buying this thing. I mean, there's like, all jokes aside, people have absolutely hammered it. They've been hammering it. It is a company worth watching. It puts in very nice, I mean, stupid moves. Most every day you can get $4, $5, $10 out of it. They are less IV inflated. The contracts move just as good as an NVIDIA contract at a lower price without the nonsense that is associated with NVIDIA being tricky to trade. So all jokes aside, I do mess with Norvin a lot and everything. It's a very, very great thing to trade. And I mean, even though we all thought Norvin was just off his rocker when he, comes back out of nowhere, talking about SMCI and it's the next NVIDIA, and we thought he was psycho, and now the thing's up like, I don't even know the math on that, 700% since he brought it up to us. Yeah, we just checked AMB on the 15-minute, didn't we? There's still not a cup and handle there. Yeah, we're on the 50. This is the 15-minute right here. I mean, it's just a, just a nice V. I mean, and these are my levels on, like, these are I have very few levels I care about up here because it's kind of uncharted, so this is what I care about on this thing right now. How do I set my stops? So we'll just kind of go to it. And, so I trade different than most people. So I trade different than most people. Here's my chart from today. I trade level to level. That's it. So I take re-entries. Like people might have seen me and Savvy joking in like Trade For today about like me like paper handing some calls or whatever. So I bought calls down here knowing where my stop was, trimmed here, ended up getting stopped out, I think somewhere around here for 100%, then started complaining. Well, to me, I didn't get another nice entry. We knew getting back above, and these are all daily levels, I've had these forever. I knew getting back above here was good, but I sold here or here, whatever it was. So I didn't really have another entry. Well, we broke my next level. So I bought 475 spy calls here. It's that simple. You stop below here. And then how I traded this one, because I don't love buying calls, this close to the opening range top, but there's a big uptick in volume. They were buying everything. I'm going to remove this box for now. How I like to, and this works. You can do this on longer time frames. Understand your risk could be a bit, your risk could be like, it gets bigger on longer time frames, but say you enter here. Well, now I want to wait for candles to push upwards, and we know where our stop is, so we're ignoring that side for now. But I wait for candles to push upwards. And what I like to tell people is wait for the candles to set a new high. So, say we enter on this break. We get a little push. We still aren't moving our stop. This 10-cent move or whatever is like, I mean, it's late in the day. It probably paid okay, but probably not quite enough to move the stop. Well, now we get a nice push up here. Move your stop to the bottom of the candle. We get another nice push up. Move your stop to the bottom of the candle. And then we get another nice push up. I mean, at this point, you go to your level, you get another nice push up, another nice push up. Move your stop to the bottom of these candles. So then you aren't just praying, you're basing your stops on the chart. There's times where maybe you buy this breakout, and you get a nice push up and you trim, but you move your stop to break even and you get wicked out. That's just the way it goes. You aren't always going to have these like beautiful pushes up, but set stops based on levels, set stops based on candles, EMAs, VWAP, whatever you use. Don't set stops and take profits on feelings. Set them on things on the chart. And so that's what I did. I got back in 475s here. I scalped them up to 475. I was likely completely out on this candle. And going into close, man, I bought some 477s. Savvy watched me do this one too, man. They ripped it for me. I tried to set my stop and then it was rejected because it was dropping too fast. And so I saw 150% and sold for 20%. That's just the way it goes, markets move quick. So good question. Would I buy at support or buy at breakout? Oh, in this case, man, I don't know what I was looking at when you sent that message, but if you can remember, I'll go back to it and answer your question. Yeah, consumer sentiment, home sales could be a pain. Oh yeah, XLE, that thing's worthless. Like, I mean, this was the easiest short on the market, in my opinion, recently. I mean, like we knew so end of the summer, the US made it very, very clear. And like we saw the first drop and a nice bounce, but the end of summer going into early fall, the US made it extremely, extremely clear that we didn't fill the oil reserves when we were way down here. We didn't fill the oil reserves, and we need to fill the oil reserves because that, all the, do the oil reserves being full actually matter in my opinion? No, but it gives us peace of mind. We have oil. It's like, and like I don't want to talk about politics, I don't want to talk about anything like that. We were getting clobbered on oil prices. Back here we were getting clobbered in 2023 on oil prices. And this isn't the oil chart, this is the energy chart, but it's oil companies. XLE is not going to be green if oil's having a red day, I'll tell you that much. We're getting clobbered on oil, and so Biden made the decision to open those reserves and really, really empty them and bring down our oil prices. And hey, it worked. It worked great. That was the last time our oil prices dropped. Well, then we started having tensions, Middle East, Ukraine, like all this stuff started happening. So of course oil prices are going to bounce, and they tell us, hey, we were dumping oil. We were not buying oil when we were down here, and we want to buy oil, and we want to be buying it below $80 a barrel. The US laid it out for us. And so at this point, we're now seeing XLE get hammered. It's not until we start to see the oil reserves fill. You can of course play longs, like don't get me wrong, like look, this is an epic bounce on energy. I don't even know what that is, but some percents up, maybe 5% bounce on that thing. Of course, take those trades when they're there, but you don't really want to be thinking long-term oil until we really start hammering the buy button on oil. That's when you want to get long on that. But yeah, this thing is clobbered. Oh, nice. SPY and QQQ. So when I trade SPY and QQQ, I am extremely, well, I have things, like I trade that thing that I talked about. Let's see, I'll get my indicators back on. I am extremely cut and dry when I trade SPY, QQQ, any of the ETFs, I don't, and I think this is a habit that basically everybody needs to form. You want to know that, or you don't want to, I can't say no. You never want to assume a level is going to break. You want to assume a level is going to reject. And why we want to do that is statistically speaking in the market. And this is taking EMAs, VWAP, bull flags, bear flags, whatever, cup and handles, support, resistance, trends. 80% of the time the breakout fails. It doesn't matter what it is. That's why a flag works, because you push up, and why I don't like to call them flags. It's consolidation to me is all it is. You get a nice push up, and then you consolidate into some form of support, whether it's a level or an EMA or a trend or whatever it is. And then that consolidation is the market building liquidity to push upside, So that is why I trade how I trade. If I'm entering at this level calls because I assume it's not going to break, then my stop is any close below that level. My target is the next level. Obviously, if I was buying this and we have all these EMAs and VWAP, damn well I'm going to be trimming most of my position going into this mess right here. But that level is the target. So you get out. The mission is get from here to here. Either you stop out or you get to there. And so I am always going to be buying calls here, as opposed to buying puts down here on something like this. Did they end up working? Yeah, after they got blown out of the water. It's the same as up here. 475 is huge. This blue line is the opening range, in my opinion. It's something that I use, and so something that I'll take note of. So when we were in trade floor and everybody's screaming we are gonna blast 475, blah 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 blah, not a chance, in my opinion. Like, we are literally setting the opening range in like 10 minutes from here, and we have 475 overhead. I was short right here. For a nice drop down there, knowing stops over 475. And then up here, I look at this as, this is a double top. I know it's technically speaking a higher high, but this is a double top at the top of the opening range with the failure at 475. I short this. I don't look for the breakout. I look for the rejection. One of the trades that I took right down here, longed this. I think it was this one. Yeah, longed this one, instantly stopped out on the next candle because I trade, I have two different types of stops that I trade. I have a stop loss that, you know, I say I'm buying calls here. If I get a close below this line, then I'm stopping out. But I also have a protective stop where if I think something could go crazy, I am always going to have that stop set at the maximum amount that I want to lose on the contract. So I got clobbered by this wick, would have paid nice on this next one. I might even got in on this next one. Clobbered on this wick, stopped out, that ended up closing me what would have been green on the trade. And so, you know, that kind of stuff can happen, but I always assume support will hold or resistance will hold until they don't. And then when they don't, you know, like right here, you break above it. So now you buy calls. And where are we looking? 475. Same as here, break above it, you buy calls. Where are we looking? 474.26. So always assume they won't break, and you will start having a lot more success. You know, I mean, people try to catch breakouts and instead they get chopped for 4 hours and lose a bunch of value on their contract. And then the breakout comes and they unfortunately lose money, you know? How to know the support is strong? So what I tell people, and great question, what do I think about T? Best stock on the planet, J-Dub knows. There's nothing better to trade. So what I try to tell people is, you know, always take notes of intraday consolidation. Today was a day where my levels happened to be they were pretty good, you know, but I always tell people, take note of intraday consolidation, you know, something like this. You know, and look for the breakouts, you know, the breakdowns, or, you know, if it ends up breaking out, even could have drugged a little further. But do I care about 473.66 tomorrow that was resistance today? Not really. So I'll say 90% or more of my levels come off the daily and the weekly time frame. Those levels will be strong. They will last. I mean, some of these levels, well, I guess we've been up here so long now, you know, it makes sense. But some of these levels are from the end of 2022, you know, the last time we were trading up here. So, you know, those daily levels last forever. I mean, I can't say forever. You know, if you ever see a level that just gets blasted through all the time, you can always delete it, but get them off the daily and you will start doing a lot better. T, what's T up to? Clobbered, huh? Oh, nice push though into the end of the day. Man, there's just like big volume going into things after the close. Look at that, 4 million volume. That's like almost 10% of the total volume on the day. So T, you know, went back to our really nice entry down here. Same ones we've just been trading over and over and over again. So T's in this interesting thing, got smoked by the divvy, and then you know, that was this gap down right here. This was just it was a dividend day, you know, which selling after dividend day is like you should expect it on basically everything. You know, not necessarily like Apple or something, but on basically everything you should. Well, now we have earnings next week. Can't wait to trade it. Will not be surprised. Hope we don't. Would love to see some push up. Will not be surprised to see a bunch of sideways action, just kind of waiting for that earnings tomorrow. But as always, the 1620 area, always a good dip buy. I know Ryan Dunn hit this one today, so it can pay really, really well. You guys know, super cheap. I mean, I got clobbered on this thing up here. I don't remember. I got him at like 19 bucks or something. Oh no, I bought him here, 19 bucks. Classic lead cable news, drops us like $1 or whatever, you know. And I still was able to get all those things for $5 or something like that. So don't get me wrong, is 80% loss on most of the position, 70% loss, whatever it is, but it's 15 bucks, 14 bucks, you know. Do I use on your range of support and resistance? Absolutely, because what the opening range tells us, you know, on something like SPY, and it's funny because today was one of the days where it was not accurate. So these blue lines, everything else. These blue lines are the opening range. So generally speaking, what the opening range tells you is and I base mine on the first hour and a half of the day. So that's 8 o'clock my time. You want to find the highest high and the lowest low in the first hour and a half of the day. Sometimes it'll be right at that time, you know, but we see with this one, the highest high was 10 minutes before 8 o'clock my time. So we know that there is a 90% chance higher low of day has been set. we also know there's an 80% chance that breakouts fail. So we know that as long as we're in here, we're trading range activity. So you short the top and you long the bottom. You know, that's what you do. And then as soon as you get outside, you know, and we can even see this one, God, it took 10 tries to finally get outside of this thing. Then you can try to short it, you know. And so but today was a day where this was in fact, you know, not the low of day. This was not the low of day. This was not the high of day. And we actually set a new low and a new high of day. However, days like that are much more rare. Let's see. Oh yeah, I wasn't on my computer the last few days. But if we go back, you will see very, very frequently that it will hold the higher low. You know, one of them will be the higher low of day getting set. Or if you get those breakouts, it can work as, you know, we've broken out, treat it as support and play the move up. So that's how I like to do it. But yeah, I mean, it's just, you know, I like statistical stuff, no feelings, no like, you know, I like things that you can't really argue with, like they are or they are not. And when you are either right or wrong, you know, so that's why you guys see me. I mean, I focus on all like the simplest of the simple. Like I've tried all the fancy, you know, like I've tried fancy everything and none of it works for me. One that I do like, that I rarely talk about, this is from this guy in here, Assassin. If anybody doesn't know him, you should like reach out. He's kind of the goat at like anything algo. But he made these ribbons for me, and man, his ribbons are sick. And then you don't have to support that Ripster dude. I can't stand him. And so if you're into ribbons or anything, maybe ask Assassin for some ribbons. You know, he calls them clouds, I guess, but whatever you call them. I mean, they're a nice one. And then his are really cool because you can set them based on like anything. So he's a big, and I know you guys all hear me be against it all the time. He's a big 1 minute trader. So these things work very, very well on the 1 minute chart, you know, and offer those really tight stops if you are trying to take projections or anything like that. But man, I keep it simple. Give me three. What I tell people is give me support, resistance, a trend, and 3 EMAs, and I will make money. You know, no issues. How do you trade them? I mean, think of them like 2 EMAs. So, you know, like any sort of, and I still have it set on the 1 minute setting. So we're going to look at the 1 minute. I do not support the 1 minute. If you're trading on the 1 minute, you're going to get blown out of the water. You look for breaks, just like any other EMA. You know, they're always a pain when, you know, technically speaking, like the market is choppy right here. So a lot of the time they will lack, you know, all EMAs do pour when the market is sideways. They offer great scalps up or down, whatever it is, you know, but you want to wait for an EMA to start trending and then you want to wait for the break. So really when I'm looking at this, you know, 1 minute chart today or whatever day this was, bunch of consolidation, don't care about that. You know, the EMAs are useless to me here. Well, now we started coming down and now we break above it. I take an entry right here and my stop is right down here. I mean, that's, you know, dramatically simplifying it or whatever. And then they work the same way as any other EMA. You get a pullback to it, buy the pullback. You know, your entry's here, your stop is here, especially coming into that opening range, you know? And so, I mean, ribbons are in clouds, whatever you want to call them. They're a extremely powerful tool. And they're, you know, some people don't like EMAs because they aren't quite visual enough for them, you know? And when you have something like a ribbon like this that's telling you like, oh, I'm buying these pullbacks, my stop is here, I don't get stopped out. I'm buying this pullback, you know, maybe you enter it here, you still get that bounce down there and you get the move up, you know, or you buy this pullback and you get stopped out. No big deal, you know, that's all it is. And then you can do the same thing, you know, short these bounces up into it. Ooh, you probably would have got stopped out here, but this is a 1 minute chart. I forgot. So you probably wouldn't have got stopped out there. It's the 1 minute chart, you know, or even short this one, you know, they just offer a really, really great thing. So yeah, I don't know if Assassin wants to share him or anything. Sorry, I probably should have asked first, but he's great. That's something that I do really like personally, you know. But man, I like real simple. I mean, my charts might not like look super simple to people, but if we zoom in, you know, because like they do kind of like look like there's stuff going on or whatever, you know. But if you zoom in, I got the 9, the 20, and the 50 EMA. Pink line's VWAP. That's my indicators. Like that's what I 90% of the time that's what I'm looking at. Then on another chart I got the hourly 20. But That's 90% of the time what I'm looking at, you know, 4 little squiggly lines on the chart. And as I said, blue lines are opening range, but that's it. So I like to keep it simple. Simple is the best thing. Oh, what's the best strategy to find entry and extra points? Support and resistance. I mean, it's worked for 100+ years, you know, it's going to keep working for us. Support and resistance is the bread and butter of any and all traders, whether they realize it or not, you know. Okay, well, if that's gonna do it, or if there's anywhere, if there's any more, you know, questions, happy to go over them. I got a couple more minutes, but if not, we can call it a day here, whatever you all want. And if anybody's got to leave, thank you so much for coming. I appreciate y'all being here. Nice little Thursday night. Well, good question. Contract selection. It's actually, I think I have a lecture tomorrow. I'm not sure yet, but if I do, it is going to be on contract selection. But if I had to give somebody a general rule of thumb, if you're new to trading, it is never the correct time to trade a daily. You should always be trading a weekly option. However, if you're trying to trade something like SPY or QQQ or things like that, always when you're new and you don't understand volatility, maybe you aren't like perfect at position sizing yet or anything like that, buy time. You know, what I like to tell people is, you know, yeah, those SPY contracts that are $40 and expire in 5 hours look pretty tempting. But if you don't understand how those contracts move, you're going to get destroyed. And so on something here, let's pull up, we'll just pull up SPY real quick. If you buy 3 days at a time, you can start to, and this is going to get a little advanced, but there's a thing called delta. It tells you if the stock moves this much, you will make or lose this much money. So say you buy, oh yeah, we'll go 474. You buy SPY calls at 474 because it breaks above it. If you buy a couple of days time, you can look at the delta and it's going to be pretty dang accurate. You're going to have some theta effect, but unless you're holding it all day, it's not going to go very good for you. What it's going to tell you, you know, maybe you have 30 delta on it. So you buy SPY calls at 474, you're targeting 475, you're going to lose, or you're going to make $30 if you get there. You're going to make a little bit more than that. It can go the same way. You want to stop out below 473, we'll call it 50 to make it easier. You're going to lose $15. So buying time makes the delta easier to understand and a bit more accurate. But for newer people, it is never the right time to buy a daily. In my opinion, you should always stick to at least a couple of days and then, you know, go weekly contracts for sure. Yeah, right on, everybody. Thank you so much for coming. I appreciate y'all for being here. BRT. Oh my God. I mean, do they have like a deal with SMCI or something? That's how you know what they are. Oh, they're what? Well, it's got a 55% short float. So really oh, wow. Norvin, what is this thing? I don't even know, Norvin. I can't get into these because I have no idea what this is or what they do. Yeah, thank you so much, everybody. I appreciate you for being here. Yeah, those can be super helpful. I have those up. I look at the charts a lot just to like know where they are. Video recommendations for levels. Yeah, mine in the Discord. They'll be in probably technical analysis. There's probably some of the beginners ones, but both me and Testy, a bunch of people have done them in this Discord on, you know, charting support and resistance. I can't recommend other people's videos because I think most of them are probably useless, you know. So I can really only speak for the OOT videos because I've seen them and I know Testy and I know the people who do the videos and I actually trust their opinion. Be very, very careful going on YouTube trying to learn things. Most of the time they're wrong. Oh, they do something with data centers. Yeah, I mean, it's on a rip. I don't know. Like, I mean, I'm not shorting it, but 55% of its shares are shorted right now. So I'm thinking this is just sort of an unbelievable short squeeze going on currently. I mean, it's just ripping in the after hours too. I mean, look at that thing. It's up $1.75 in after hours. But yeah, unfortunately, can't be more helpful there. Oh, Tesla. That's decent tomorrow. Okay, well, that's gonna do it, everybody. Thank you so much. We're gonna call it a night here. I appreciate y'all for being here. If I, went too fast, said too much, anything like that, always feel free to send me a message and ask questions. I'm happy to answer them if I can. And with that, thank you, everybody. Have a great night. Yep. Norvin, Joe, thanks, everybody. Thanks, all of you. And we will talk to you tomorrow, Friday.